Hello, investors and traders, and welcome to the weekly market report. I'm 𝐊𝐸𝐽𝐫, and a very happy new year to you. This is the very first weekly market report of 2025, and if you're a regular follower, I hope you're enjoying every bit of the content that we put out. If you're brand new to this channel, please remember to subscribe and like. That will do us a big favor so these videos get put on the menus. Now, first and foremost, understand that I've developed a 7-point trading checklist for forecasting price targets. And this is one of the main reasons why we have had an 82.2% hit rate for 2025. And we're continuing to improve on our service for our members. And my goal for this year is to help you increase the percentage of accuracy with regard to setting your own price targets. So let's get to work. This is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And as you can see here, my downside target right there of 424.31 was reached after the upside target was reached back here at 432.62. And if you look carefully, you'll see that we have a bullish harami candle. Now remember, when I'm looking at the trading checklist, I look at the type of candle first, then I analyze the volume and everything else that goes past that. So that bullish harami is bullish 80% of the time. It's very much like a bullish engulfing that you see back here. Those two are related, or more or less cousins in the technical analysis world, and you can see that bullish engulfing candle resulted in higher prices. This too, I believe we're going to wind up with higher prices. I'm not going like gangbusters to the upside. I'm going up to where I think this moving average is going to wind up. So my upside target for DIA is 431.37. One of the main reasons I'm not so much more bullish is because we don't have an increase in volume on this green candle. Down below, we have a buy signal cross on the stochastic, and we have a pivot showing on the CCI. Once this blue line, which is the CCI, starts crossing over the black line, that's the zero line, then we could get a little bit more bullish, because each time that zero line is crossed, we generally get 2 to 4 days of price movement in the direction of the cross. You can see back here, we crossed to the downside on that zero line there, and then we continued to go down. Much longer, obviously, than 4 days, but that's average. 2 to 4 days will get that movement. So again, upside target on DIA is 431.32. If I hop to IWM, you're going to see that we do have a pivot right there. As I magnify that, we have a higher low and a higher high. After a half signal yesterday, we had a lower low and a higher high, but today we have a higher low, higher high on a green candle. Again, not big volume, but we do have the oscillators moving up. So I'm going to the upside on IWM with a price target that's going to be maybe a little bit over that moving average next week. So that's 227.79. Again, you could see all of the previous price targets that were hit, both to the downside here, and we did a two-parter back here where we hit the upside and then came right back down a couple days later. So I am catering more or less to the swing traders and to the option traders who are spread traders. These price targets and the way I analyze the charts are extremely valuable to the short-term traders, because it helps them adjust their own price targets, not just for entry points, but for exit points as well. So that's IWM. Again, upside target is 227.79. If we go to the Qs, you'll see once again, we did hit the downside target from the last report. If you like, you can go back and listen to that report and then follow through and come back to this report so you could see how I forecasted these targets back when there were no candles here. Obviously, I can see a pivot point here, and I'm going to set an upside target for the Qs right there at 525.58. But again, as you can see, there are no candles. I'm projecting out into the future. And that's why, again, we use technical analysis for forecasting. Down below, you could see that we have a pivot on the stochastic with a positive divergence down here. A positive divergence is when you have a lower price low, but you have a higher low on the low for the stochastic. Now, we don't see the same thing happening for the CCI. We just see the positive divergence there for the stochastic, and that's, again, another reason why I'm going to the upside on the Qs. So, again, the upside target is 525.58 for the Qs. Now, I'd like to spend a little bit of time on SPY because I have a couple of extra lines here that I drew a couple of weeks ago, actually. This vertical red line represents the end of the window for the Santa Claus Rally, aka the year-end rally. This green dotted line is what the average should have been had we hit our mark for the Santa Claus Rally. So in other words, the majority of the time in this 7-day window, which includes the last 5 trading days of last year and the first 2 trading days of this year, we would have had to have averaged a price 1.4% above the original close at the beginning of the window. Hopefully that makes sense for you. We came far short of the average price in that 7-day window, hitting, which would have been 603.01. Now, this is very important because if you go back and analyze the history of the Santa Claus Rally or the year-end rally, you'll know that when we do not average 1.4% price increase in that 7-day window, then chances are we are now entering into a bear market. So keep that in mind. While my short-term target for SPY is going to be higher, up by this moving average up here at 597.99, I do believe we are going to set another lower high as we get to that point. And I do believe we're going to start pivoting lower once we hit that target area. So now that we're past the year-end rally, I'm going to remove that line right there. And I'm going to remove the target line as well for that mark, which again, obviously did not average in that area. So we have a nice clean chart right now. We do have a pivot point. We do have a pivot on the stochastic, and we have a pivot moving up on the CCI, which is telling me the buyers are showing more strength than the sellers. Now, moving to the VIX, and I will be talking about Bitcoin and silver, so stay tuned here. We had a couple of people request that, so I'll do that to kick the new year off right. But the VIX is showing a pivot lower. You see that now? Yesterday's VIX had a long shadow on top. That is a shooting star at the end of an upward leg here. That is more bearish than bullish. And if you notice, as I magnify that, there's hardly any shadow, if any shadow, at the bottom of that red candle. So I do believe the VIX is going to drop just very slightly next week. And then I think we're going to start to pivot up. I'm not going to do a 2-part forecast. I'll just do the downside forecast right there at 15.13. Now, talking about silver, I still like silver a lot. We were talking to our equity traders last night, and I was telling them that this pattern right here represents a cup and handle for silver, with the brim or the rim of the cup being resistances up here. Once we start breaking out over the $30 level, silver could easily go up to the $50 level. So my forecast for silver over the next 12 to 18 months is up there around $50, and I do think we're getting close to that being a double or a 2x on the price of silver. Now, one of the reasons I'm going that so far up with my price target is because if you look at GLD on the monthly chart, you could see that we have already broken out of this cup and handle here, and therefore the target price for gold is going to be pretty much the depth of the cup here attached to the breakout point. So I could see gold moving up at least another $300 higher from here before hitting some resistance. But silver has a lot more room to go on the upside. Now let's talk a little bit about Bitcoin here, ticker symbol BTC. You could see that last month we had a shooting star, but the stochastic is pivoting lower, the CCI is pivoting lower. I still have a downside target on Bitcoin down here that's still open right there of 86,600, and I do believe we will hit that. You could see that we are losing some of that volume at that moving average. So next week, I think Bitcoin could start pulling back or pivoting back from that moving average. So keep an eye on that, you Bitcoin traders. Now, like I said, I use the 7-point trading checklist. You have full permission to take a screen grab of this, or if you like, you could send us an email to AJMembers, plural, AJMembers at StickyTrades.com, and we'll send you the PDF document. But let's get to some of the economic news that's recently come out. U.S. credit card loan defaults have jumped to a level that we have not seen since 2010. So we're 15 years since we've seen levels like this, and that is a warning sign, folks, because credit card defaults generally lead to bankruptcies. And one of the reasons that people are defaulting is because the average interest on credit card debt has reached a record high. Now, don't be fooled. The Fed has lowered the Fed funds rate, but the bond market has a whole different mind of its own as we're approaching the point where we have to refinance or issue more bonds to finance our debt or the interest on the debt. So the bond market is not cooperating at all with what the Fed is doing and lowering rates. And credit card companies will continue to raise their rates as well. Now, these two are warning signs. Again, credit card loan defaults and interest rates going up is going to create more defaults, so it's more or less feeding the fire. But when you look at the general market right here, you can see this is a chart from Bank of America Global Research. The market has never been so weak under the surface, meaning that only 17% of the stocks outperformed the S&P 500 in December. Only 17%, folks. So there is an underlying weakness here that many of the financial programs are not reporting on. And not only are they not reporting on it, but they're not giving you the delinquency rate on commercial mortgage-backed securities. Look at this spike here. It's going vertical. So we have personal credit card debt delinquencies going up. We have commercial mortgage-backed security delinquencies going up, and the writing on the wall is not looking good. Now, there is good news, folks, because we here at Sticky Trades are teaching our option traders how to make money on the way down. We use put spreads. We use different strategies that allow us to capture profits when the markets are dropping. And if you'd like to learn how to do this, it's not too late to start. You could just join in and plug into our Sticky Trades University. You could plug into our webinars. And for 2025, we are continuing the offer to give you a 15-day free trial membership. And I give you my word, we do not take credit cards for that 15-day trial period. We're not going to play those games that many of the companies do with more or less getting you to sign up, and then it's up to you to have to cancel, and then they bill you, right? If you don't like what you see, then we remain friends and you continue to plug into the free YouTube channel. But if you like what you see, then you could sign up and take one of the memberships that best fits your needs and what you're trying to learn in the market. Folks, I am very optimistic about 2025. I hope you are too. Stick with us. Again, please continue to like and share and subscribe. And by hitting that notification bell at the very top, you'll be notified when these reports go out so you can get them firsthand. So that is it for now. Again, Happy New Year. Have a great weekend, and I'll talk to you on the next report. So long.